In today's video, we're going to explore the 10 most frequent mistakes made in trading. So let's get started. But before we move on, if you find this content helpful, smash that like button. And if you're new here, don't forget to subscribe and turn on notifications so you'll never miss our latest uploads. I'll see you right after the intro and disclaimer. Trading mistake number 1 is the fear of loss. On this chart, you've decided to take a long trade after analyzing the price action at this level. After some time, according to your analysis, the price returns to your entry level, but you hesitate to enter, fearing a possible loss. Later, the price moves in your direction and rises while you keep watching. Eventually, seeing the price climb further, you jump into the trade at a higher level than your planned entry without much thought. But soon, the price goes a bit higher and then starts reversing. Because your entry is now at a higher point, your stop loss becomes very wide. A small correction forces you to exit the trade in panic. As soon as you close the position, the price resumes in your favor and eventually hits the profit target. This happens with many traders. If, after proper analysis, the price comes back to your entry level, you should take the trade without fear, because that's why stop losses exist. Stop losses are meant to limit your downside. Trading mistake number 2 is exiting winning trades too early. Whenever you enter a position after proper analysis, both your stop loss and profit target should already be defined. You should not exit until one of those levels is reached. Many beginners hold losing trades for too long without applying a stop loss. But the moment a trade shows a small profit, they quickly book it without considering risk to reward ratios. This completely breaks their risk management. Once you're in a trade, you should avoid closing the full position until you at least achieve a 1 to 2 risk to reward ratio. Instead, you can lock in gains gradually by booking partial profits through a trailing stop loss. Trading mistake number 3 is trading in OTM options. Here we have the weekly option chain of Bank Nifty. At present, Bank Nifty is trading at 45,200. The premium of the ATM strike call option is $383. Which means you need to pay $745 to buy one lot of Bank Nifty. The delta of this option is 0.50. So if the market rises by 4 points from here, the premium of this call option will increase by 200 points. Now, if you instead buy the OTM call option of Bank Nifty at 45,600, you will only pay $10 for one lot. However, since the delta of this option is just 0.34, the premium will rise only by 136 points. Also, in OTM options, if the market turns sideways after your entry, theta decay works rapidly, and the premium of your option decreases quickly, leading to losses. That is why you should avoid trading OTM options. Trading mistake number 4 is placing stop losses at weak levels. For example, you take a breakout entry, but the very next candle forms a long wick and triggers your stop loss. The price then finds support below, creating another setup for a long trade. As soon as you enter again with your stop loss below the breakout candle, the next candle dips, makes another long wick, and again hits your stop loss, before moving back up in the direction you predicted. This situation frustrates many traders. To avoid this, your stop loss must always be placed at a valid and strong level, which helps you reduce the risk of stop loss hunting. Trading mistake number 5 is overposition sizing in intraday trading. Imagine a trader with a capital of $100,000. After analyzing price action, he decides to take an entry and invests his entire capital into Bank Nifty options, buying multiple lots of the same strike. As soon as the trade begins, he sees some profit as the market moves in his direction. But because he entered with an oversized position, fear of loss makes him exit early with a small profit. Immediately after he exits, the price continues upward in his favor. At this point, he can only regret, as the price has moved too far for him to re-enter. That's why you should always trade with a position size you can comfortably hold until the profit target, without fear. Trading mistake number 6 is trend bias entry. Some traders decide before the market even opens that they will only go long for the day. But when the market opens and bearish price action appears on the chart, these traders still enter call side trades, ignoring the actual pattern. As a result, their stop loss is hit multiple times, and later they end up blaming the market or others. This is why, in intraday options trading, you can estimate the likely market direction to some extent. But most of the time you must remain neutral. By following trade setups as price action forms on the chart, you will minimize unnecessary stop-loss hits. Trading mistake number 7 is random trade entries. To be consistently profitable in any type of trading, you must have a clear plan and follow it. In this chart, you analyze a long trade setup, take the entry, but your stop-loss gets triggered. You analyze again, re-enter, and once more your stop-loss is hit, leaving your P&L in red. Despite doing proper analysis twice, you end up with losses. To recover quickly, you start taking random trades without any planning, which only increases the losses further. By the end of the day, your overall loss becomes so large that it impacts your trading psychology. That's why, even if your stop-loss gets hit 2 or 3 times in a row after proper analysis, it's better to stop trading for the day. Later in the evening, calmly review your trades. Identify the mistakes, and ensure you don't repeat them the next day. Trading mistake number 8 is FOMO trading. In this chart, the price is consolidating and moving within a fixed range. A breakout on either side has high chances of leading to a strong move. Keeping this in mind, as soon as the market tries to break upward, many new traders wait for the breakout candle to close above resistance but then quickly enter out of fear that they might miss the move. Initially, the candle pushes upward, but before closing it slips back inside the range, and the price reverses, forming a bearish price action. This is the danger of FOMO. You should never jump into a trade without proper entry confirmation, no matter how strong the move looks at first. Trading mistake number 9 is poor risk management. Before taking any trade, it's crucial to know exactly where your stop-loss lies. If your profit target is smaller than the stop-loss, you should never enter such a trade with full quantity. For option traders especially, maintaining at least a 1 to 2 risk-to-reward ratio is very important because the win rate in options is relatively low. With a 1 to 2 ratio, even if only 3 to 4 trades out of 10 hit the profit target, you can still remain profitable. Always evaluate how much risk you are comfortable taking before entering. If the setup aligns with your risk management plan, only then take the trade. Otherwise, it's wiser to wait for a better opportunity. Trading mistake number 10 is overtrading. Many new traders often see profits during the first hour of market opening due to high volatility, which boosts their confidence. But as the day progresses into the second half, that confidence turns into overconfidence. They start taking random trades without analyzing price action properly, leading to losses. To recover, they keep entering trades even when no valid setup is present, which only makes the loss bigger. Such repeated mistakes can affect psychology and lead to frustration. That's why you should never chase the market. If you take a loss on a given day, accept the small loss. Stop trading and close the day. Controlling overtrading is one of the first steps to becoming a consistently profitable trader. That's it, traders. Thank you for watching this video. Remember, success doesn't come overnight. It's created day by day through consistent effort. If today's content helped move you even a step closer to your goals, support the channel with a like. And if you're new here, hit subscribe and let's grow towards success together. I'll see you in the next video.